Hello everyone, I thought I'd do a different style of video today, more of a quick, simple sit-down video on change in state delivery. Now if you don't know what this is, it's essentially a reversal pattern, which in my trading is crucial to use in order to place a trade. I do not place a trade unless we have a change in the state delivery. So I'll change this here just so it's easy. Change in the state of delivery. So that's essentially what it is. It's basically you're framing a reversal. You're making sure that the market wants to go in the opposite direction. So if we're in a bullish trend, we want to see a change in the state delivery to the downside. If we're at a bearish trend, we want to see a change in state delivery to the upside. So as I said, I cannot place a trade unless I have this. This is probably the most important thing in my trading. So it's very good. I highly recommend you guys watching it. It's a very quick video, very simple. There's obviously more to it, but as per my other guys, I like to simplify things and make them really easy to understand and easy to digest. So let's start in a bearish scenario. So if we're in a bearish trend, we are trending down. Let me change my can I change this? Get out of the way, big head. Right, so if we're trending down, right? We create a low. Sorry, let me make this red. Let me make this red. Jesus, my first time using this software. So let me just stick you up there. Right, there we go. So we're trending down, right? Which is pretty normal. Where you trend down. We're trending down, right? We're going to create a low somewhere. So it's important. This low, if we're looking to place a trade here, this low should enter a higher time frame PD array. Now, if you're not sure what a PD array is, I have a very simple guide on fair value gaps, and that's essentially the most important thing in my trading as well. So when we're trending down, we want to enter into a level. So that's a PD array, so a fair value gap, an order block, etc. So we're trending down into this PD array. We create a low. What we're then likely to do is retrace a little bit. Now that's fine. We do not want to enter in here because this is where people get stopped out. They'll be like, okay, price has entered this gap. We've already rejected. So I'm going to enter in here, but people then get stopped out because the market comes back down to grab some more liquidity, okay? So we wait for a move down into a PD array, we wait for the retracement and then the move back down. So what we must see is a sweep of liquidity, an internal sweep of liquidity. So of course we can also get an external sweep of liquidity somewhere over here, but what we want to see ideally is an internal sweep. So this will be on like the 1 minute time frame, for example. Because a 5 minute change in state delivery will take a lot longer than a 1 minute change in state delivery, in theory. Okay, so we want to see a move down into a PD array, a retracement, a move back down to sweep this level of liquidity here. And this is where the change in state delivery comes in. So what we want to see is a close above the candle high on the series of down close candles that swept the level. Does that make sense? Let me go through again. So a close above the series of down close candles that swept the level. I think that makes sense. But we don't need to worry about the wick. It's just the candle body. Okay. So a close above the series of down close candles that swept the level. But importantly, we want to see some kind of momentum through the level. So it's not just a little close. What I love to see is a fair value gap being created through that level. So as you can see here, we created this fair value gap as we swept the level. This makes it a lot more likely for the trade to play out in a upwards direction because we're already showing momentum through the level. It's not just a tiny close, we are showing momentum. So either we place our limit order and we wait for price to retrace back into that fair value gap and continue upwards, or we can literally just place our trade on the candle close after this momentum candle here. So you can either place it on the first candle here as it creates the fair value gap, or if we have momentum through, you can just place it on the next candle. So either or, as long as what you don't want to do is let price carry on upwards and then you enter here, because you've already missed half the move. So you want to enter either on the candle closure after the momentum candle, which is this one. So you either want to enter here, or you place a limit order on the fair value gap retracement just here. Okay, I think that makes sense. So in a bearish scenario, what we want to see is price trading upwards into a bearish fair value gap, or under the PD array, for example. So just like this. We create a high. We see the market retrace down, go back up to sweep that high. So there you go. This would have stopped out many people because they would have entered quickly and been like, okay, this is it, the move has started. No, wait for the resweep internally first. What we want to see is a close below the series of up close candles that swept that level. Okay, so a close below the series of up close candles that swept this level. So if the series of up close candles are here, this might actually be a green candle actually. So let me just change that. So it might be like this actually, but you get the idea. It's the series of candles up close, so that only the green candles, not the black, only the green up candles that swept the level. So as you can see, the bottom body of the candle just there, and here we create a fair value gap, so that shows momentum to the downside. We'd either enter on this candle here as we create that fair value gap, or this candle. But as I said, you don't want the move to move down because you'll miss most of the move. So you either wait for the candle to retrace back, or if you don't want to miss the move, you enter here after the fair value gap has been created. Stop loss would either be above this level here, below this level here, below this level, sorry, or if the fair value gap is large. So if you have a fair value gap which is a lot larger than this, you'd place it below the fair value gap or above the fair value gap. Does that make sense? So we have our entry, our stop loss, and our take profit would be another level of liquidity down here. I think that kind of makes sense, but I'll run through some chart examples now just to give you a bit more of an idea of what I mean. So if we head over to TradingView, I can find changes to deliveries super quick, and you're going to be at this level soon, so don't worry about it. But all we need to look for is a low, and then a basically here. So inside here there'll be a change in the state delivery somewhere. So as you can see, the external liquidity has been swept. Okay, so if I mark that out, where's my little template? Okay, so the external liquidity has been swept. Let's go to replay. Hopefully I can replay it. So the external liquidity has been swept. This is great. Okay, what we want to do, because we're on the 15-minute time frame up here, we want to scale down to the 1-minute time frame because those time frames are aligned. Okay. So it doesn't look like here we're going to get an internal sweep, but I can show you anyway the change in state delivery. So as you can see, price heads down. Let me find, are we in any kind of PD array here? We are in an order block. So there we go. We have an order block here. So price is inside the order block, that's fine. So we can delete that just because you guys know. So we're inside an order block, which is great. So we've swept liquidity. We are inside a higher time frame fair value gap or order block. We then sweep external liquidity. So as you can see, this is the series of down close candles here that swept this low and also the external low. So you've got two liquidity sweeps here, internal and external. So that's great. Price is coming down. We're creating lows, creating lows, creating lows. And we failed to sweep this low yet. I haven't seen what's going to happen, but yet we failed to sweep this low. So our change in the state delivery level is here. So we're going to mark this out as change in state delivery, because this is the series of down close candles that swept the level. Okay, so if we play price on, like I said, we want to see momentum through the level. So it's not just a tiny close, but it's momentum. So as you can see, we have there momentum, we have a fair value gap being created. So what I'll do is either wait for the fair value gap to be created and enter on here, or I would just enter on the displacement through that level. So there we go. We have our stop loss. We have our entry just there. Stop loss, I would either place below the very, very low swing point, which is here. The very, very low swing is just there. So I'd either place it below there, or if that's too big and there's not much liquidity above us, luckily there is here, I would place it below the fair value gap or another liquidity area. But let's just try there. So we have that. We're going to aim for liquidity above us, so either like a 1.5 or 1 to 2, something like that. Whatever you guys usually aim for, I'd either say liquidity areas or a set risk to reward, but somewhere where there's going to be resting liquidity. So above us here, look, we've got London highs, we've got midnight open. Both of these are a good sign of liquidity. But if this is quite high for you guys, this is what I was saying. You can bring your stop loss down to a different level of liquidity. So if this is making your take profit seem quite high, simply bring your stop loss up to another swing level. Don't be too close unless the fair value gap is quite aggressive. So let's just do that as a 1 to 2. Then if we play price through, see we'd entered the fair value gap there. So if you had your entry on the fair value gap here, you would have been entered into this trade. This is what I was saying, you either put it on the fair value gap or you just have it on the candle after the change in state delivery. So let's just play price through, see how it goes. So just into New York session now and take profit hit. Okay, so that's a 1 to 2. This is purely off two confluences. So a high time frame PD array and a change in state delivery with momentum through the level. So let's just go through again what we've got here. So what we've got here is an external liquidity sweep, 15-minute external liquidity sweep. We've got a 15-minute order block. We're inside the 15-minute order block. Then internally, so on the 1-minute time frame, we have a liquidity sweep. So as I said, we have the internal liquidity sweep here. So we've swept the internal liquidity. So it's fractal. So the market is fractal. So what you want to see is the higher time frame align with the lower time frame. So we've swept external. We've now swept internal. We've then got, we failed to sweep this level again, which is fine. This is good. We're clearly creating bullish momentum because we're creating higher lows, higher highs, higher lows. So here is our change in state delivery. This is the down close candles that swept the level. Okay, both internally and externally. It doesn't have to be that, but this is what we have. Okay, then next we want to see momentum through that level and a closure. So as you can see, the candle high, not the wick, just the candle body high. We close below that, above that with momentum here. So that's our change in state delivery. And we either enter on the candle after the momentum candle, or we enter on the retracement to the fair value gap. Either or is fine. As I was saying earlier, you can either enter here as well. I wouldn't recommend this because it means your stop loss has to be quite low down because we need it below a swing point, remember. So I wouldn't recommend that. I'd either recommend doing it on the fair value gap or on the candle after the fair value gap. So as you can see, we had minor drawdown here. We then basically smashed take profit, like it has been smashed, absolutely smashed. So I think one example is probably enough. I don't really think you need to see any more than it. I'll show. Actually, no. Let me show you a bearish example. Let's not leave the bears out. So if anyone trades NASDAQ, which I'm sure you do, it's obviously been quite hard to find bearish scenarios at the minute because we're constantly going up. But we should be able to find one here if I can go back in time. Okay, so again, we have an order block. Let's just mark out this order block. So we have an order block. Okay, price is traded into the order block. Boom, we know that. Get rid. 15-minute. Have we swept external liquidity? Yes, we have. So swept this liquidity here. This could be London highs or some kind of New York highs or something. Are we going to sweep these as well? Let me just see. No, okay, that's fine. For example, say we swept these as well. This is a perfect example if we swept these. But we swept liquidity there. So we swept external liquidity. Let's go down to the 1 minute time frame. So then we have our internal high as well. So say, yeah, okay. So we have our internal high as well. What we would love to see is this being swept as well. Just for extra confluence. We don't need this, it's just for an extra confluence. So for now, our change in state delivery level is there. We could put it right here, but I wouldn't feel confident in doing that. So let's do it here. What we want to see is a close below with momentum below these candles here. So let's just play price through. Perfect. So this is a single candle. This is quite rare. We don't usually get a reaction this strong, but as you can see, we close below and we also create a fair value gap. Which what? It shows momentum. Great. Good answer. So as I said, we put the limit order here and we have our stop loss above this high, or we have it just here on the next candle open, stop loss again above that high. But what do we also see here? We see momentum through the level, which is great. We then have our internal sweeps here. Look, so we have all this internal liquidity being swept. So this is perfect. Okay, we've got these internal levels being swept. We then fail to sweep the high here. So we create a lower high, which is great, absolutely great. And then we're going to place our stop loss above the high, our entry just after changes at the re. We're going to target a 2R because that is the dream. Target a 2R. There's obviously liquidity low, so we could even target a 2.5 or a 3. What is that? A 2.5. Let's do a 2.5, a little cheeky 2.5. And then we're going to play price through. So again, price absolutely smashes. And that is as simple as that. So I hope this video has been helpful. It's a different kind of video, but I think it's a little bit more laid back, a little bit more simple. I feel more comfortable doing it like this, but it's more of a chat, you know what I mean? Yeah, so that's changing the state delivery. Super simple, super effective confluence for you to use in your trading, but it works. So hope it's been helpful. If it has, drop me a like, drop me a comment, drop me a subscribe, drop me a follow, drop me a blah, 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 and I'll see you in the next video. Peace out.